Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Friday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. And guys, I'm super excited. We're getting views and more subscribers. I'm just excited to be posting more, and I'm happy that the extra videos and uploads are helping out the channel. Just, makes it easier to keep going and keep posting, guys. So it keeps me motivated. So thanks for all the support. So we're going to go over our metrics for today. So starting off, overall, we are up around $770 today. For the week, we are down only about $100, which is surprising given all the market fluctuation. For the week, this is where it really started to trend downward, down about 3% or equivalent to about $1,500. Then the 3-month mark, down $1,500, right about 3% again. So our 1 month and 3 month marks are relative. They are around the same amount. Then year to date, we are down about $1,450, down about 2.9%. Then for the full year, we are down $3,064.45, or right around 5.85%, maybe around 6%, right? And then all time, guys, since I started investing in around April of 2018, I am up $13,728.93, or I am up 38.56% all time. So, guys, keep in mind, fluctuation just means that there are deals in the market. And so I want to take a look at my portfolio and see what is down for today. As you guys can see, my buying power is $1.94. I did get a dividend, and I put that money into realty income. So I did cost down average a little bit into one of my favorite positions. But let's take a look and see who's down big today. So jumping right in, realty income is up $1.80 today, or up over 3%, which is nice. I do have 143 shares. As I said, I did buy an extra share. Market value is around $8,700. Average cost is $67.10, which did go down with my purchase. Around 17.7% of the portfolio is in realty income. Today we're up $250, or up 3%. Total, we're still down about $870, down 9% for realty income. So that is a pretty good buying opportunity there, down about $6 a share, which is great. A nice average down opportunity. I could only buy one share with the dividends. I've actually been at my job for about a week now. I get paid weekly, but I have to build up a clientele before I get a lot of hours. So right now, all my cash is going towards rent and living expenses. But that will change given the next few weeks as my schedule gets more concrete. So next we have my personal favorite, Coca-Cola. That is up around $1 today. We only have 10 shares, $609 of market value. Average cost is right around $61 per share. 1.24% of the portfolio is in Coca-Cola. I want this to be the first or second largest position in the portfolio, so this is going to get some massive money put into it. Average cost, I plan on cost down averaging, but this is one of those that if it's close, like if it's at 61 or 61.50, I will put money into it. So this is still investable for me. I know it would bump up my average cost, but with Coca-Cola, I don't mind as much because it is my favorite stock. Today we're up $10. Total, we're up $1.56. So a big jump today, but overall not crazy big considering my average cost. Dividend coming in on April 3rd of $4.60 for those 10 shares. Next, we've got Altria. So Altria, we have 315 shares, right around right on $13,860. You usually don't get zeros like that. Kind of threw me off. Average cost is $47.34. 28% of the portfolio is in Altria. Today we are up $170. Total, we are down $1,051.12, or down about 7%. So a great cost down average opportunity, guys. Here, about $3. Given my total share count, that makes sense. But I will say that I'd rather put money into Coca-Cola just because I like the company better long term. But that is the point. I will be using the dividends from Altria to put towards other deals that I see. Next, we've got Apple. And this is my second favorite stock behind Coca-Cola. So I've used Apple products for over 10 years. I have a MacBook. I've had iPhones. I currently have a Samsung, but I do like the Apple iPhone more. It just was a personal preference at the time. I'd had a Samsung for about 3 or 4 years, but I do prefer the iPhone. I've had an iPad Touch, all that. So, excuse me, guys. I was just taking a drink real quick. So love Apple. I only have one share, $160 of market value. Average cost is $132, so I'm up pretty big on this position. 0.32% of the portfolio is in Apple. And then today we're up $1.38. Total, we're up almost about $27 with an almost 21% return total on Apple. So love the company, and I do want to add to it, but I don't want to add to it at these prices. Next, we've got AbbVie, which is up $2.75 today. Total, we have 95 shares, $15,000 worth of market value. Average cost is $95 per share. So, guys, we are up pretty big on this position. 30% of the portfolio is in AbbVie, which that's 1/3 of the money that we have invested. Now, that's a huge position, but guys, keep in mind, I'm up almost $6,000 on this position. So if you minus that out, really, this position is around the same value as something like T. Rowe Price. It's just it's accumulated so much or gone up so much that now it rivals that position. I believe Altria, I want to say Altria is the biggest position at 13. Nope, it was. But now it looks like AbbVie has surpassed it, which is crazy. So this is by far the best investment I've ever made in the portfolio. So I bought this during the Allergan. I'm not sure how you say it. But when that company was being acquired by AbbVie, AbbVie dropped pretty considerably, down to like $87 a share, I believe, and then I bought more when it was around that cost, so my average cost did go up a little bit. But now it is the single biggest position in my portfolio. Now, a lot of investors would freak out and be like, okay, I need to sell out and diversify, or, I'm not putting any money into it, but it is, I mean, it was a value investment. And it's been, pumping out dividends, growing for the past 4 years. So when I originally bought the stock, I believe the dividend was like $1.08, I want to say, when I originally bought the stock, and now it's paying me $1.41 on 95 shares. So not only did I buy it in a moment of weakness, and of course I did do a pretty decent calculation. I think my fair value was like 125 for it though, so it's above my estimation, which I'm not complaining. So, I mean, I'm happy that, the pipeline's done well. Humira's done very well for the company. So I bought it in a time of weakness. I held it, and I've just let it compound for the past like 3.5 years. And now it's my single biggest position, guys. I'm up today over $260. That's not really the focus for me, but total, we're up nearly $6,000. So I have a 66% return on AbbVie, which is just insane. So it's compounded quite well for me, and I'm very happy and thankful for the management and the continued growth of the company. So that one is going to be a buy and hold forever for me. I would like to add more to this position, but as you guys can see, my average cost is way below that 158. So it's one of those that I would love to, just like Apple, I would love to buy more, but not at these prices. If AbbVie drops, I really do want to get to that 100 share count, or if I have any cash sitting on the sidelines that, I'm kind of trying to save up cash right now for expenses just because I was unemployed for about a month. So I'll get back into the groove of things with putting money into the market. But one of the goals that I have is I want to get Coca-Cola to 100 shares. But if AbbVie dropped below my average cost, I'm allocating every cent that I can to AbbVie, and I'm going to just continue to build that up if I can. So that's kind of the catch-22 when you try to do value investing is you always want to cost down average, but sometimes when you make an estimate on fair value, with AbbVie it was kind of hit or miss. That one was a little bit further out than what I was expecting, because it's performed better. But the only problem with that is now I can't add to it. So now I have to sit and wait, be patient, and reallocate funds when it makes sense. So right now, and honestly for the past like almost 2 years, I haven't been able to put any money into AbbVie because I've been up so much on it. So great overall investment. It's just I'd rather see it go down than go up, because now my money's trapped there and it's compounding. So it's done great. It's just I'd rather it go down so I could buy more of a company that's done really well for me. Next, we've got T. Rowe Price, which honestly, I think T. Rowe has the ability to compound just as well as AbbVie, especially at these deflated prices. So guys, I have 100 shares, right around $11,000 worth of market value in T. Rowe Price. Now the difference, and I love this, the difference between this and AbbVie is the average cost is 121 and the stock price is 109. With AbbVie, the stock price was 95. The average cost was 95. The stock price was 160, around that area. So this is the complete opposite of AbbVie. This is one that I bought, and the thing is, guys, at the current price I have for my average cost, 121.68. If you look at it, that is still, $36, $37 of upside on this stock plus the dividend. So I bought it not at as good of a price as I bought AbbVie, but it still made sense. But here it's tanked because of the bank and the financial issues that SVB had. It's pouring into other stocks. So this is phenomenal. This is exactly what I want to see. This is, the best situation that I could possibly have with T. Rowe Price. I want this to go down. I want this to go down further so I can lower my cost basis. And with that allocated capital, so every share I buy now has a higher yield. So I'm making more money with I'm making more money by putting less money in. So it's like, think of it as like a Black Friday sale for stocks. That's where T. Rowe Price is right now for me. So I'm ecstatic. I can't buy enough T. Rowe Price. So what I plan on doing is, with this dividend of $122, I'm going to buy it. And the funny thing is, I'm going to cost down average. So I can buy a T. Rowe share now forever around my average cost. So that is awesome. Plus, keep in mind, guys, I do have that realty income dividend of around $36 every single month coming in. So this month I had about $150, $160 some actually coming in. So without adding any new capital to the portfolio, I can now forever buy a share of T. Rowe Price with its own dividend. So really, T. Rowe is paying me to buy itself, which is awesome. And eventually, guys, it's the same deal with AbbVie was at that point. I make around $140 with AbbVie right now, but at $160 I can't really buy another share. So that's why I wanted to go ahead and put Apple or T. Rowe Price. So the goal with this portfolio is AbbVie is going to buy T. Rowe. T. Rowe is going to buy Coca-Cola, and then Altria is actually going to buy Apple. So all of these are going to compound into each other. So this month's dividends will be for next month's stocks. But since T. Rowe pays so late, I wanted to go ahead and add it here and lower my cost basis. So I'm super excited about T. Rowe Price. Once I get my schedule, kind of more concrete, I will be putting more money into the deals that I see, and I hope that T. Rowe Price is still a monster deal, like it is right now. And then, of course, let's take a quick look at the watch list. I did do a video on SCHD, so I'm going to go ahead and just swipe that because I'm looking at Visa. So right now it's at $121. This has not been performing it's been performing better than the overall market, which ticks me off because I want to buy it. So I want it around, I think it's so let's say I want to buy it around 190, 200. Is kind of the range. So I said around $200, so a little bit lower, a little bit higher. That's kind of my range of fair value for Visa currently. So I am sitting on the sidelines waiting, just like I am with AbbVie. But I will add Visa, and it will kind of help T. Rowe Price. I want to have two stocks paying me, at least two stocks in each month or each quarter, and Visa's going to fill that spot for me, but not at current prices. Like I said, I want it to drop about $20 to $30 before I put any money into Visa. Then Berkshire, sitting pretty right about $300. I would buy it here if I had the extra cash. So that's one of those, just like T. Rowe, that I would be pouring money into if I could. So love Berkshire for the insurance float. They own 5% of Apple. They own 8% of Coca-Cola. They own 7 to 10% or more of American Express. So they own a lot of businesses, plus they own a lot of stuff outright. Their insurance business is one of the best run property casualty businesses in the United States and in the world, really. So they own See's Candy. That's one of the big reasons why I want to own them. So I love the product. I literally would eat it every day if I could, and I'd work for them too. for free. So with that being said, guys, that wraps up the portfolio update. Like I said, happy Friday. Let me know how your portfolio is doing today. Like I said, we were up pretty big. What happened for you guys? I want to know down in the comments. Thank you guys so much for watching. I've been super pumped up. Like I did warn you guys at the beginning of the week, it's probably going to be a little difficult to do videos just because I was getting used to the work schedule, but I'm used to it now, and I will be doing weekly videos or daily videos on my portfolio and try to get, a couple videos here and there extra recorded for you too. So thank you guys so much for watching, and I will see you guys on Monday with another Robinhood portfolio update. Take care, guys.